In this video, I'm going to break down the exact and only strategy that you need in order to pass funding challenges and achieve 5 to 10 payouts every single month. When it comes to viewing this piece of price action here on pound dollar, what we identify is first of all the overall swing range. So this is simply part one of what you want to be doing. You want to be identifying that we are in a bearish market, forming lower lows and lower highs. So we're overall trying to trade this lower high further in towards the downside to create a new lower low and break this swing low over here. First of all, this initial impulse in towards the downside is already beautiful in itself. If we view the overall price action that we see here, we can very clearly see the market pulled back up in towards premium levels. So everything above the 50% mark is my so-called premium level, and I'm happy to look for shorts from there. Now, if we furthermore look at what price did when coming into premium, we can very clearly see that it came into this area of fresh supply. So this is an area of fresh supply due to the fact that we saw a buy before a strong sell-off in towards the downside. This is ultimately the area of supply from where the market broke structure in towards the downside and confirmed its bearish trend. Now, next to that, coming in towards that supply zone, we had the confirmation that we were bearish due to the break of fractal structure. So next to the fact that I use swing structure, I also like to use fractal structure. So what we have here is a break of this fractal high. This fractal high got broken by the low of this bearish candle over here. So this to me is a market structure shift after coming from this area of supply. So we have the uptrend, then we push in towards the downside, break this structure, and for me that is then confirmation that we have a bearish range. At that point in time, what does the market do? Well, it pulls back in towards this area of supply, and as you can see from there, we sell off one more time in towards the downside. Now, this initial entry, for example, you could have missed, but that is not a problem because overall the market still is expected to push further in towards the downside, right? Because the overall swing structure is still bearish. We formed a lower high or a potential lower high over here, and we're now looking to form a new lower low. So the market is still good to look for sells. If we pull back, we can still aim to get in on another lower high like one of these other two. So looking at this piece of price action, we press play, we see the market push down, and then eventually it breaks structure. So what we now can see is that we formed a new lower low. So we weren't able to get in on the initial push, which is not necessarily a big problem because now this is your new lower high, this is your new lower low, and we're just simply forming new areas of supply from where we can potentially look for a short. So what I'm now identifying is that we have supply situated over here and we have supply situated over here. So I'm looking for a short from one of either areas of supply. I do not yet know where I'm going to short from, so I'm not going to just simply place a limit here or here. No, I'm going to wait for the market to come in, show me its hand, and show me that it wants to push further in towards the downside. So what I see happening is that we push in towards this supply zone, we get the initial reaction down, and what you see happening is a market structure shift. So again, the overall fractal structure breaks. So what we can see here is that we break the overall fractal low. So in theory, what's happening is that here you get the push down into this low over here, you get the push up, you get the push down in towards this low over here, you get the push up in towards this high over here, breaking this high, you get a pull back in towards this low, then you get a push up, and now again we're seeing a push down. So what this means for me is that we're forming a new area of supply over here, and I'm now happy to look for a short because this area of supply broke this low over here. Now, a lot of you may ask yourself, but Fabio, we have not yet pulled up into a premium price level, right? So we haven't yet pushed above the overall 50% mark. This is not necessary. If the market is extremely bearish, and we already get bearish confirmation by reacting to this area of supply, then very often I will already be happy to look for that potential sell-off further in towards the downside. Now, what I would do in this situation is now after the market structure shift, I would set my entry on top of that supply zone. I would target a 1 to 3 risk to reward. Now let's see what happens on this initial entry. So you can see we get wicked in, we see the slowdown, and from there the market pushes down, chops a little bit, but eventually we push further in towards the downside and create a new lower low. So this is the method that you're probably missing in your strategy, the validation of areas of supply and demand. Probably what you're now doing is you're just simply waiting for that higher area of supply to get hit. You're drawing in your Fibonacci retracement. What you're now looking for is probably that 618 to get hit. We have a nice area of supply over here, and you identified that this high is liquidity. Yes, that is correct, and it's not wrong. If the market would have pulled in towards there, it would have been an amazing short. But what we have over here is already a liquidity high. We sweep the liquidity, see kind of like this fake breakout in towards the highs, see the market structure shift down after coming into supply, and then confirming that we have a new area of supply over here. And then as you see, we sell off in towards the downside. So this is the strategy that you're probably missing. If you have any questions, let me know, and I'll see you in the next video. Thanks, guys.